DeFi darling and blue chip platform Curve Finance was drained for roughly $50 million, with a lot more at risk. And of course, the risk of the CEO and founder being liquidated on a $200 million loan that was taken in shitcoin CRV that he used to buy 2 mansions, which could collapse all of DeFi. And if that wasn't enough, Richard Hart has been sued by the SEC for securities fraud and, of course, launching an unregistered security right before his movie that's going to embarrass all of us is coming out. And in the meantime, BALD, a token on the new base protocol from Coinbase, pumped 4 million%, and then rug pulled and died before people could even access base protocol. And now people think that SBF or someone from Alameda is behind it, and crypto is fucking embarrassing. I'm going to talk about it with Michael Fasanello now, with Charlie Burton in the back to look at charts and trades. Didn't want to get up out of bed this morning when I read the news, but here we are. Let's talk about it.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of Wall Street. Before we get started, please subscribe to the channel and hang your head in shame on the like button. You can hit like for my video and my channel, but if there was a crypto button at the bottom, I would ask you to aggressively dislike that button, because wow, man, this place is embarrassing. It becomes harder every single day to defend the concepts, the protocols, the people. My gosh, it's the endless exploits and hacks and bad behavior by a bunch of young, rich people who do not give any shits about you. Do I still believe that it's the technology of the future? Sure, of course. There's incredible things being built, but man, are people taking advantage of it? And once again, it is retail that will suffer and be hurt by all of it. Now, listen, all of this is very technical, way over my head. As usual, we need a guest to help us explain. I've got Michael Fasanello. Welcome, man. How are you?
Yeah, it's great to be back with the Wolf again. That's one of the only reasons I got up this morning, Scott.
Well, it's funny. You pointed out right before the show as we were talking, is if we want to talk about embarrassments, I think last time you were on, you went off screen and SBF came on screen.
Mm-hmm. Yeah, he followed me, or I followed him, one or the other.
Yeah, we thought he was amazing at that time, though, right? That was the best guy you could get.
It was the white knight, for sure.
I will tell you, the one guy I never had on the show was Richard Hart. I canceled a podcast with him at one point, and he was in my DMs, and the Hexagons were attacking me and telling me that I had to get him on. And we were tempted. Pretty smart guy, but I dodged that one at least. But we can talk about that later. First, I want to dig into Curve here, right? Because there's a lot to parse. I think a lot of people viewed it as just another exploit, but as we went further down the rabbit hole, you realize how sort of incestuous all of these DeFi protocols are, and that there really is sort of systemic risk if one of them fails, or at least fails or gets exploited in the wrong way. For people who didn't see, Curve Finance drained to 50 million, while CRV token sinks 12% in latest DeFi exploit. This is, last updated in the middle of the night last night. So price action has obviously changed. There's a ton of buying right now. I'll show it on the chart later, a ton of volume, but still, I mean, this became dangerously close and still could be a big problem. Can you just give us the really broad strokes on what happened here and why it matters?
Yeah, absolutely. High level executive summary. So July 31st, yesterday, Curve Finance suffered an exploit, draining roughly 70 million. The root cause was what's called a 0-day compiler bug in the Viper language, which is used to write Curve smart contracts. So I'll break that down a little bit. 0-day bug is basically when a bug is found by an attacker and there's zero time for anybody to respond to it. So no, incident response, no attempts to mitigate. That's the 0-day piece of it. The compiler bug, basically, it was a time lock, or a lock that should have locked down the reentrancy from the protocol was faulty. So reentrancy, imagine, in its broadest context, somebody trying to jump from one subway train to another, doors are open, trains are going moderately slow, easy to do. reentrancy locks would have caused basically a closed door scenario where the person jumps and no matter how slow the train is going, couldn't get through. Reentrancy also, if you go to a bank teller, you try to take out a certain amount of money, they're going to go back and check the balance in your account. In this scenario, basically, while the bank teller was checking the account to see if there was sufficient funds to remove, the attacker was already pulling money out of the drawer. So that's the basic high level so everybody can understand what's going on here.
Yeah, as I have it here, reentrancy is a common bug that allows attackers to trick a smart contract by making repeated calls to a protocol in order to steal assets. A call is authorization for the smart contract address to interact with the user's wallet address. So basically just repeatedly attacking this wallet and taking out the funds until it's empty. And now from what I heard, the good news here is, and by the way, you talked about Viper language, and that's basically the bridge between Python and EVM, correct? So it allows, right. So all way over my head by the way, guys, this is me just doing the research to try to figure it out myself. So why does this matter? Like in context of DeFi, obviously you have these DeFi pools where you have Ethereum and then you have that native token and people are using that to lend and borrow stablecoins. Yeah. I mean, in 2022, our company researched the numbers and it was like 4 billion in exploits, DeFi hacks alone. 47% of those were through smart contracts. So almost half of that was like 1.8 billion was through smart contracts alone. So this is no small issue with the space. As much as DeFi wants to be the alternative rail of finance, you've got the sins of the flesh in traditional finance. You've got the greed and all that stuff. On the other side of it, when you pull all the humans out of it, then you've got to worry about the code. Is the code right? Because when the code messes up, there could be major problems like we're seeing time and time again in DeFi. Right. So for all of the hate that we get from regulators and from the outside, to some degree, it's deserved because DeFi clearly isn't ready right now. Right. I mean, at this point, like, why would you put a ton of money into this? And the funny thing is that I even was one of the ones who said the argument, when we saw CEFI collapse, Celsius and Voyager and all of these. Well, DeFi came out like a shining star because the loans were, people had their margin calls. It was liquidated in an orderly fashion. Life chugged on, smart contracts, but these smart contracts can be hacked.
Yeah. Yep. I mean, there's really there's three ways that this can sort of proceed in a healthy fashion. So there's got to be improvements to smart contract auditing and testing procedures. I mean, the Curve hack, it proves that bugs can slip through even the most robust checks, because Curve was no small player in this field. I mean, they do their due diligence, they do their audits, and they usually have everything all buttoned up. So this is just one of those scenarios where the hackers happen to find something that nobody else found, and it's not uncommon. There's always going to be a better coder, there's always going to be a better hacker, and there's always going to be a more vulnerable protocol. So auditing methodology has to continue advancing. Second thing I'd say, like implementing responsible vulnerability disclosure policies that give the developers enough time to patch bugs before the exploits actually occur would be helpful. Wouldn't have that 0-day situation. And then lastly, trying to have something in place, that gives you a holistic security protocol instead of just mitigating attacks as they come. Have something that's actually able to, detect and deter these things.
Yeah, I think here's my biggest problem is that I fully support, obviously, free markets and people doing whatever they want with their money when they understand the risk. But the risk here is completely unknown unknowns that somebody who's making a loan or taking out a loan cannot understand or assess. How do you assess the yield? Like, how much yield is worth the potential of a hack that you can't address that, requires you to trust the platform?
Yeah. No, it's almost like if somebody's going to be issuing a loan, they should be performing the audit on the protocol itself of the native chain that they're looking to loan against, right?
Yeah.
It's like an open the books in the situation. Normally that would be a little bit questionable, but I think in this circumstance, you need to start doing that.
Yeah. This is from Curve Finance. As a result of an issue in Viper compiler and versions, whatever. These are the pools that were hacked. CRV ETH, AL ETH, MS ETH, P ETH. By the way, might as well be in Chinese. This is so stupid. Why do we need all of these ETHs? I understand why, by the way, but come on. Another pool potentially affected is Arbitrum's TriCrypto. Auditors and Viper devs cannot find a profitable exploit, but please exit that one. So the good news here was that it was only pools with native ETH, which are actually not the most popular. So if this had happened on the ST ETH or whatever all these other ETHs are, I have no idea, pools that were EVM, that were direct for EVM, we would have had a much more massive exploit. So this was on the cusp of being a much bigger deal.
Yeah, they basically exploited the gas pools. If they had exploited the ERC20 tokens, I mean, this thing would have been so massive, it would have pulled down the whole house. So
the whole house being all of DeFi.
That's the broader stroke. Yeah.
Yeah. Okay. So let's talk about why everybody's actually freaking out with this on top of what we've already seen here, right? I'm going to go through these. Curve founders, 168 million stash is under stress, creating a risk for DeFi as a whole. So there it is, right? This guy has pledged. This is the genius that we're talking about who created this and is smart and protected, and CRV has great people. 34% of CRV's entire market cap, he has pledged in a single loan that would be liquidated at 37 cents, right? On Aave, I think, largely.
Yeah.
And why did he take out this loan? To buy 2 mansions.
It's office space, you know.
Office space. Two mansions in Australia. Here's the house, if you guys are wondering. They're next door, though. So, you know, one for your girlfriend and one for your wife, I guess. Or maybe for when guests.
Strategy I can get on board with.
Well, I mean, okay. So, yes, I'm not doubting that these people are smart, that they're building these things, but this is hubris on an astounding level. Obviously, he never believed the token would go to 37 cents. It required a major exploit to send it even close. I believe it bottomed at 48 or 49. But does the guy creating DeFi not realize that using the bulk of the supply of a token that you effectively got for free as the founder for massive loans to get dollars is maybe a bad idea?
You said it. Absolutely.
Okay, so let's talk about what FTX did with FTT and how this is not so dissimilar.
No, I don't think it is at all, right? So they were borrowing against their own native token and certainly commingling customer funds as well in order to do that. And in this scenario, it's everything except, I guess, the customer funds, right?
Yeah. So basically, they create a token. You then give yourself hundreds of millions of dollars worth of it, and then you use it for a massive loan. So what would happen if CRV was liquidated here? Because this is a smart contract, guys. This isn't the situation where, like, you know, if a billionaire is going to get liquidated or margin called, they call the bank, we'll work something out, we'll send over some more collateral. Come on, guys, you know me. I'm good for it. My yacht over in the Caspian Sea will cover it if you guys need. That doesn't work here. If you hit that trigger price, it's a wrap.
Yeah. Yep.
Okay, so what happens?
What do you got for me, Scott?
Well, okay, sorry. Yeah, I mean, it sells off all of this CRV on the open market.
Yeah.
As far as I understand it. So you dump 34% of the supply of CRV immediately on a completely illiquid market where there's no interested buyers, right? The buyers are setting a floor above here to prevent this liquidation, right? Because Justin Sun stepped in, as usual, by the way. I think I read that Justin Sun got to buy the tokens OTC at 41 cents when it was trading at 55 cents. What a hero, right? But he stepped in. There's a huge floor on Binance below this. But if this got liquidated, CRV goes to fucking zero. Aave goes close to zero. Comp goes close to zero because it causes yet another liquidation cascade of every coin, including the blue chips, sending it down because DeFi can't handle 168 or 200 million, depending on the price, liquidation.
Yeah, it's run after run after run. We saw that with 3 Hours Capital, Celsius, Voyager, all that. It's just dominoes.
Yeah, I love what this person said. This shit is just making the case for SEC. What the fuck was wrong with all these people? I was in the crypto town hall chat this morning. If this isn't a bottom signal, Mario, I was messaging with everybody in there, and I said, is it possible the SEC was, like, sarcastically, obviously, ... kind of right? You know, and I've said this a million times. I hate Gary Gensler's approach. I hate the way he's doing regulation by enforcement. I hate their approach to crypto in general. But 99% of this shit is scams and it's a casino and should go to zero.
I think when DeFi touches traditional finance enough that people are actually, you know, doing ICOs and doing formal like loans against these things involving the US dollar. That's all right. Let the SEC step in. It's their territory. But when it's dealing with just overall crypto and them just blanket saying everybody that's in crypto is looking to make money, so for that reason, under the Howey test, it's a security. That's just such a stretch of the law that, to me, I mean, as a previous, one of my character flaws is being a lawyer. So, I mean, to me, it's just obtuse. But
okay, so listen, I don't even know, I don't even know that I want to talk about this, but everybody obviously trying to short this. Because the natural instinct of a trader is let's go liquidate this guy and short it to zero and make a ton of money. But as I said, that's sort of put in a floor. So if you look at the CRV chart, which I have right here, as I click through all these things, I mean, if you were just blindly looking at this chart as a trader and not paying any attention to news, this is like the biggest buying interest you've ever seen on anything after a drop right here at support. So I get it. There's a lot of buying interest here stepping in, but I feel like you could find other assets if you're dying to participate. But listen, now that we've talked about CRV and we know that we could have crashed all of DeFi effectively yesterday, but maybe we're out of the woods. I want to show you a movie, Michael. I don't know if you've seen this yet,
let's take a look.
But the news broke yesterday that Richard Hart, finally being sued by the SEC. Effectively, the claims are one, the obvious, which is that he launched an unregistered security, right? And so people are saying that can't be. XRP is not a security. Guys, the secondary sale, programmatic sale of XRP is not a security, but it's very clear that the launch of XRP and the initial sale to institutions was. People coming out, the Stockholm syndrome in this space is insane. The Hexicans still defending him, saying that they sacrificed their money. They didn't invest it. And that's the language that Richard used. So obviously it's not a security if he says you're sacrificing your money. But they're saying that not only did he commit the sin of an unregistered security offering, I don't really care about that, but that he then took user funds out of that and bought things like the world's biggest black diamond, some cars, famous videos of him walking out of Louis Vuitton with all the bags, flaunting the wealth in everyone's face. And then if you read deeper into the claim, it talks about how Richard Hart basically either himself or with other whales took the funds that were coming in, these massive amount of ETH, and recycled it in and out of the contract to look like more people were buying, to pump it up further, to say, hey, look, everybody, look how many people are depositing. What a party. Come on in. Right. So I'm seeing a lot of conjecture. He'll go to jail. To be very clear right now, this is the SEC, which means it is civil. There's no DOJ. There's no, Southern Department of New York U.S. attorney yet coming after. Although if this is fraud, that could likely happen. But I want to show you a movie because apparently they made a movie about Richard Hart and it's coming out in like 3 days. So let's look at the trailer and see if you feel super psyched to be in crypto right now.
Okay, we are set for you, Richard. What do you want people to know about you?
I got a big dick. This here is $3.1 million of watches. I don't know the world's biggest diamond. You don't. I do.
Who is Richard Hart? Genius.
Legendary.
Arrogant. Bit of a narcissist.
The benevolent king.
$250,000. Hate me. Hate me. I'm farther than you'll ever be in your whole life.
Who does this guy think he is?
Whatever the governments have been doing, it's not worked out. You've never had worse interest rates. Your money has never been worth less. Everything is getting worse. The only thing that's making it better is cryptocurrency.
I'm sorry to interrupt, but did he just say there's never been worse interest rates? All right, okay, here we go.
It's better than the dollar. It's better than gold. It's better money.
Crypto is money without governments, and it is money without banks.
You're not going to meet another product like this as long as you live. Yes, every scammer in the world is going to tell you something similar.
Good morning, everyone. Are you ready to look for some fraud this morning?
They are promising 40% annual percentage return.
I want to make people millionaires. I've made thousands of millionaires.
Richard Hart's HEX token is a brilliant scam.
Desperation has a look to it. And when you're looking for just anything, you will fall for anything.
HEX is going to be the new cryptocurrency. We'll take over the market. There isn't anything else out there that's worth the shit.
Everything I have worked for all my life is staked in HEX.
Good. I put it all in.
All what?
All of our house money.
Why is it important to you?
I want to feel loved. Don't you guys want to feel loved? Everybody wants to feel loved, right?
Richard is the Messiah. Savior. God.
That sounds like a Ponzi scheme.
Yes.
That you're incentivizing
Sounds
people
like
to pull money off the market.
You know what? I think you just described a 401k.
If the music stops, they're sitting on nothing. X doesn't make money. That's where I'm so frustrated. What is the value?
This is benefits. Do you want to get rich?
No, I don't think that it's a scam. Because I trust Richard Hart.
It seems like some of this is just a large performance art project. And if ultimately this is all a big performance art project, people are going to get fucked.
I mean, you can fool a couple people, but I mean, can you fool that many?
So that means I should trust you.
Listen, I think you should trust me, but if you get into the habit of trusting people like me, you get the crap scammed out of you.
That's to be in movie theaters for actual human people to watch on purpose.
Last statement seemed good.
I mean, what do you think of that? Seriously, like first knee-jerk reaction to watching that.
I mean, I think you're painting them a certain way, and then you turn around and look at the U.S. dollar, and it's like, what's that built on either, right? Debt. So it's a shit show all around, in my opinion.
Yeah, I mean, I agree. He advertised this that the HEX was going to $1 million. And that it was the first blockchain certificate of deposit. Here's what the SEC doesn't always tweet unless they think the case is a really big deal. Today, we charge Richard Hart, aka Richard Schuler, and 3 unincorporated entities that he controls, HEX, PulseChain, and PulseX, with conducting unregistered offerings of crypto asset securities that raised more than $1 billion in crypto assets for investors. Here's the quote. Hart called on investors to buy crypto asset securities and offerings that he failed to register. Here's the kicker, though. He then defrauded those investors by spending some of their crypto assets on exorbitant luxury goods. This action seeks to protect the investing public and hold Hart accountable for his actions. So here's my problem. I can joke that the SEC is right, but how does this protect anyone? I agree he has to be punished, but how is this protecting the investing public? Because if you already own HEX, you're going to go, this is going to zero and you're losing everything.
Totally. That's the thing with all the, the regulation by enforcement is it's not positing a solution. It's just making the government richer and making a fool of the crypto industry, the better parts of the crypto industry, sadly, as well. So, yeah,
it's disgusting. And finally, before I let you go, and I can let you go before if you don't have any thoughts on it, but have you been looking into what's happening with BALD?
I don't know too much about BALD, so I'm happy to listen out here with everybody else.
You can ride along come along for the ride. So BALD, guys, in case you're wondering, was a token that was launched on Base, which is the new Coinbase exchange, which doesn't have a token. Now, how does that even happen is the question. It's pretty complicated because Base basically doesn't exist yet. So people who even were able to do this were not necessarily able to get their funds out because there was no bridge. But we'll start here. So Coinbase launched their mainnet 2 weeks ago with a public launch coming in mid-August. And then someone found the contract address and launched a token called BALD based on the bald head of Brian Armstrong. Obviously, this has absolutely no value. We all know that, whatever. But yeah, that's what you get in the crypto space. So it went absolutely nuts, right? And so let me find it. This is here's a screenshot of BALD up 4 million% in 24 hours. So there's people who are like, I put in $50, I'm worth millions of dollars, right? And saw those massive paper gains. So it rugged completely. This is what the chart now looks like. It was at a high of 0.097, just, I don't know, like yesterday, and now at 0.006. Okay, so it's down 95% from the highs. The deployers removed all the liquidity, and got away with like $5.2 million. No surprise. So this is where it gets interesting and really stupid. Obviously, this is Coinbase. Is SBF secretly behind BALD? Crypto, Twitter, debates, latest conspiracy. A, I don't really care. B, I'm pretty sure that they've made a big public statement that SBF only has a flip phone and no real access to the internet, but hey, we can suspend that disbelief and continue on. So as you can see, the bald deployer is definitely a Coinbase Insider because they traded a lot of CBETH. That's a token that effectively doesn't exist yet, and routed it through Coinbase. They are also definitely an FTX Insider since they deposited, withdrew tens of thousands of STETH through FTX. And when you go back to the deployer fund, these are wallets that were attached to Alameda and SBF. And then you get into the fact that the project Serum, which was obviously the DEX that went under with FTX because they largely owned it, they rebranded their Twitter account overnight to the Base Bald, which was the person behind Bald, and started immediately tweeting about it. So somebody who had access to the Serum Twitter account changed the name. They were the person who created this rug pull token, and off it went. And then you look that the biggest Bald depositing wallet was one of the ones that attacked Luna and UST to cause the depeg, which we know was Alameda, who was involved in it. And if that's not bad enough, the wallet is also linked to the wallet that had 40 million in donations to Chinese officials, which is part of the SBF case that he was bribing Chinese officials. These are the wallets that sent that $40 million to those Chinese officials.
Oh, lovely.
So do I think this is SBF? No, but do I think that somebody in Alameda who's really good at creating tokens and rug pulling things is involved? Yeah. It's like one day. How can all this happen in a day?
I mean, that's crypto, baby. I'm looking out for that wolf token.
I'm sure there's like 50,000 of them. There's 17,000 of me on Twitter with asking you how your crypto trading's going. So nothing would surprise me. But listen, man, so this is all Debbie Downer. You obviously work deeply in this space. Give me some positivity. What are you excited about that's being built outside of this complete and insane nonsense?
Oh, I'm really more I'm more on the side of what's being done to kind of stop some of this stuff from getting where it is. So from AnChain AI, we've got something really awesome called Web3 SOC. It's a security operations center that basically would be the first SOC 2 compliance framework basically for the crypto industry. So you've got your detection measures, your deterrent measures, you've got your incident response, all that stuff in one package. So for me, it's like sort of how can we help projects to avoid situations like Curve and all the other ones. You can't stop people from doing what they do from the human aspect, but at least from the re-entry attacks and the flash loans and all those different things, wallet exploits, address exploits. At least we can do our part and try to make the system more secure from a protocol standpoint. So that's pretty exciting for me.
Can these things be prevented, or can the black hats always get a step ahead? By the way, there was a really cool story of a white hat hacker, I have it somewhere here, but who was involved in this, who basically went and drained the pool and then sent the money back to get
was the ALGORITHMIC hacker, I think, drained it for what, 12 million, or was it the Curve one with the 5 million?
I think it was part of the Curve one. I can only dig so deep into these stories, but yeah, so there was someone, and they literally dug it and they took the money out before the hackers could, which I find is really interesting. But like, can these things be prevented, or is it really impossible even for companies like yours to stay ahead of this?
I think the prevention is in the, people were saying back with the SBF Binance situation, proof of reserve. Proof of reserve is really just a snapshot. It's a snapshot in time. So unless you're going to do that snapshot every single day, then it becomes more of what it is, which is a proof that your reserve stays consistent, right? So in this case, do you do an audit? Yeah, you do an audit, but do you do multiple audits? You should be doing those audits all the time. Keep auditing the smart contract. Keep having people look at it, because eventually somebody's going to find something that nobody else did. So it's really just a matter of having these things, implemented, to your, in anti-money laundering on crypto and things like that. We look into what's the continuous monitoring patterns of the transactions. So you want to have continuous monitoring, you want to have continuous auditing as well. And I think that's going to be one of the major things that will help keep this space more secure in the future.
Totally agree. Well, thank you, Michael. Appreciate your insight and your help here. And I'm going to keep sending you that video, make you watch it over and over again.
I love it.
All right. Thank you very much. Have you on soon again. Thanks. Funny. I see a comment over here. Scott, move on with more positive news, or please consider taking a break. I can't change the news, guys, and I'm not going to tell you how awesome it is when it's not. I'm sorry, but you can go somewhere else. It's fine. You'll be missed though. I'd love to have you back though. Anyways, so yeah, guys, I mean, this is a shit show. Like, I'm glad that Richard Hart is being held accountable, but I'm not glad that the SEC is effectively going to crash the rest of what was left of those tokens on a bunch of people. Inevitably, Hex will be delisted. People won't be able to get out. So literally their investments are going to zero. I actually had like a slight emotional reaction when I was watching that video again. This is only the second time. Watching it more closely here with you guys, seeing people say they went in all in with their house money, the guy saying his life savings are in Hex, like, fuck, really a disaster. It's easy to talk about these stories and how bad it is and the DeFi exploits, but these guys are really destroying people's lives. It's pretty astounding and sad and disgusting. But hey, man, I'm sure that we'll have great news tomorrow. I was laughing with the crypto spaces, with the Crypto Town Hall Twitter Spaces team. I was like, yesterday I was interviewing a potential president of the United States, and 20 minutes later, I was having to litigate Richard Hart and Hex, and just shows you how insane and nonsensical this space really can be. But guys, now maybe on to more optimism. Hopefully, if we have a positive view of the market, I've got Charlie Burton, one of your guys' favorite guests. As you know, we always kind of bring on a trader at the end. Talk about what's going on in the market. How are you, Charlie?
Yeah, I'm very good. Very. I don't want to say too good now, after having just caught the last few minutes of your conversation there. So we don't want to be too optimistic now, do we?
I can play the video if you haven't watched it yet. It's really good. I don't know if you caught it, but really compelling stuff. No, okay, good. Then I've saved you. You're welcome. Okay. So listen, what are we looking at right now in the market for you? I guess give the broad strokes, then we can zoom in a bit more.
Yeah, well, when I was last on a few weeks or so ago, a month or so ago, we were talking about the S&P, weren't we? We were talking about the S&P and the dollar and the amount of pessimism that's there. It's funny how times change and you have to stay on top of the markets, because it seems like there's an element of euphoria starting to creep in. We started to see a little bit in the AAII surveys, and we're starting to see a lot more activity in the options market with retail traders buying a lot of call options. So we're starting to see spikes there. And so you start thinking, okay, maybe it's time for a bit of a pullback. I don't want to start getting pessimistic or anything, but because as you know, we've both been bulls for most of this year. But I am starting to look for pullbacks.
I'm selling stocks. I'm a seller. Yeah, no. So we agree there. I mean, I think we had the run. I'm not convinced we're going to new lows or the Great Depression, as some of my guests are. But if you're trading or looking to maximize. I mean, I was selling Meta 314. I guess it just topped at almost 320 something yesterday, or last week. But yeah, I mean, largely I had a position in that I had started at 200 something, bought all the way down to 100, and then bounced all the way back up. But if in this market you can make a 3x, I'm out. I don't really care what it does next, to be quite honest. But I feel like things are topping. I feel like we're seeing the sentiment top, where bulls are extremely excited. They're dunking on anyone who's been negative. The Fed openly saying there won't be a recession at all, which is effectively impossible by any metric if unemployment goes up even slightly. Just a lot of signals to me that we're kind of topping here.
Yeah, and it's what's interesting as well. You're talking about the central banks there, is that they're all starting to turn together, aren't they? The central banks, and start changing their rhetoric together. It'd be interesting to see what the PMIs are coming out in just 30 minutes time of the US, what they're going to be coming out like. But nevertheless, I think we're in a position. If the stock markets come down, that will probably be supportive of the dollar as well. We can talk about that separately, but yeah, it just feels like we've just in this past few weeks or so, we've flipped from seeing those perma bears to people throwing in the towel and starting getting excited, as you just said. And when they start getting excited, then we start having to look the other way, don't we? So the S&P looks ripe for it, really. We've got divergences. Technically, do you want me to show some charts?
Yeah, let's. I would love. That's what we need here. The charts are better than the stories, so we got to do that. Yeah, I see massive bearish divergence on SPX overbought here. Go ahead.
Yeah, so we've got just technically, we've got some divergences. This is just a daily chart of the S&P at the moment. It's just a CFD chart, so it just tracks the futures. So just a standard MACD down the bottom, we can see we're diverging there. It's probably a bit clearer if I looked at the NASDAQ, so you can see the NASDAQ divergence there. But really, I love this technical channel that the S&P's been in for much of this year. And we've been riding the top end of this channel. It's always difficult. I don't like trying to catch a high. But we did put those key reversals in last Thursday, didn't we? On the back of that, your better than expected GDP and durable goods orders, and so where we made new highs, closed below the low of the previous day. So a little bit of a warning there. They don't always come in, as you know, straight away, but it's a bit of a warning. So we'll just see. I don't like trying to call an absolute top, but I am starting to edge that certainly I would like to see a bit of a pullback. And maybe if we start to see some selling coming in today, it might help, that's for sure. So from a technical perspective, yeah, I'd like to see a bit of a pullback here.
Yeah, I mean, speaking of, when I talk about divergence, I love trading with overbought and oversold RSI and just simple bullshit. It's like the most simple strategy in the world. It's just really consistent for me. But I mean, you've got the SPX right here, overbought. It doesn't get much more overbought on the S&P than in the mid 70s, and you've got pretty clear bearish divergence right now that's building. So to me, it just looks like eventually RSI goes to oversold. We get a correction, then we move on with our lives. Now, I don't know what happens after that. So I'm really just looking at this in the short term and trying to view it through a trader's lens, because I don't feel equipped at this point to make calls about like I said, market top before a recession or depression. It's kind of above my pay grade.
We are starting to head into a period as well of increased volatility from a seasonals perspective. As we're starting to head into August and September, volatility is, historically starts to pick up. So it does time quite nicely of where we're at. But yeah, I'm still of the view actually that if we do get a bit of a pullback, I'm still of a view of I want to be a buyer on a pullback at some point. Now, once we get a decent, or if we get a decent retracement there on the S&P, that's how I'm still looking at the markets myself, because I think what will happen is very quickly we're going to get to all-out pessimism after just a couple of percent pullback. That's what's going to happen.
That's right, 5% and everybody, we're going to zero.
Exactly.
It's inevitable.
Yeah.
So have you been watching Bitcoin here?
No. Yeah, sorry. Yeah.
I wouldn't blame you, but it's getting a little more interesting right now. I think it's showing some real reason to believe there could be a little bit more downside. To me, also just a dip to buy whenever we finish it. But yeah, go ahead.
Yeah, I know that 25,000 mark does look interesting again. Actually, it was a lovely pullback zone that when we came into there in June, but. Wouldn't surprise me if we saw some moves back down there, because I know there was a stack load of orders in the 24,000 area. I'm with you that overall, I think I'm basing my base case is that Bitcoin did bottom last year, and so we won't be going to new lows. That's my overall assumption. Whether what with all of the SEC rulings on the likes of and what's going on court cases wise with Binance and the likes, whether we're going to rip higher this year is still debatable. But as we talked about this last time, maybe 2024 looks a lot more interesting once a lot of that is cleared out of the way.
Yeah, I've just been looking sort of at the Bitcoin chart here, on the daily. We had this very clear range to me in the red here. Again, bearish divergence with RSI, which just to me always seems to work out when you're overbought. And now I think RSI is just going to head down, right? And we had the break, retest, no candles able, even on the 4 hour, to close back up in that range. So to me, this is a gratuitous short if you're just trading it on a low time frame. Right? Because you have a clear invalidation if you close a candle back up in that range. And then even this local sort of bear flag pennant, whatever, I guess we could finish drawing it here for people. Yeah. That's breaking down. So I think we could get down in the low 28s, high 27s or something here as a result of that. But I guess that's kind of boring, right? These aren't big moves.
No, they're not. I do think one market, as you know, I do love the dollar. And if I bring up the dollar,
well, let's look at it, because the dollar's faking out on this big head and shoulders that we thought we had.
Yeah, I was, as you know, I was short the dollar. I was long euro dollar did manage to capture pretty much right when the dollar got down to 100. It was an obvious level to bank some profits down there anyway, around the 100 area. So it was a reasonable exit, but then got trading stopped out on the rest. So I'm no longer short the dollar. In fact, I'm long the dollar right now, because like you say, it's a lovely fake pattern. We've had these two lows here, big breakdown bar, no doubt probably sucking more shorts in, and then it's just turned around. Funnily enough, on my charts with the MACD down the bottom there, we're diverging down the bottom there as well. This is on a weekly time frame. So I do see the
divergence.
Yeah, I do see the potential for some more upside overall on the dollar. And when we last talked, we were talking about the range of the year for the dollar, and how, you know, we're into our 8th month into the year now. The year's range is 6,300 pips, and yet the average range is 11,400. There's a lot to go as far as the range is concerned for the rest of the year. So I do see plenty of scope to expand its range. So it's either got to get back down to the 100 area where it made its lows recently, or climb all the way back up to into the 104s in order to expand its range for the year. So I think this is that's an interesting ongoing story, and obviously I translate that across into actually trading the euro dollar.
Yeah.
So
I was going to say, so people know he's looking at this for reference, but it's the Euro USD chart that he's actually trading.
Correct. Yeah. So we're using the dollar index as a reference point, exactly, and then going off and actually trading the euro. So what I'm looking at right now is, again, a weekly chart here. We've had a great run over the last 8-9 months, or no longer, since late September last year. And maybe it's time for another retracement. We've been making what I call marginal new highs that we see on the weekly charts here for the euro. I'd have loved to have seen it punch just a little bit higher, but it just couldn't manage it. And now we've started pulling back. Technically, at the moment, if I just zoom out on the daily chart a little bit here for the euro dollar, it's still within the realms of possibility to turn back up. It's technically, we've not actually had a technical breakdown as yet. But I am watching tentatively. I've got some position on at the moment, and we'll see if it does pull back. But I must admit, at the moment, if you look in relative terms at where you look at where the Federal Reserve is and where the US economy is, and then you compare it to the Eurozone, the US is outperforming. And so there's a structural argument here to say, well, we're seeing weakening data coming out of the Eurozone. And actually, in this past week, especially with some of that GDP data last week, durable goods, US is still performing okay. And certainly in relative terms, it's by far outperforming the Eurozone.
Yeah. And people, you have to remember that as bad as an economy can be, if it's relatively better than another economy, then it's doing well. And that's the whole nature of why DXY moves the way it does, because you're not judging the dollar in a vacuum. You're judging it versus a basket of other currencies. And as long as I say it's the prettiest pig in the pen, then you got to be long.
Yeah, exactly. For the foreseeable, until it seems that way. We've got some more data, obviously, lots of data coming out this week. But I do think that there's a story here overall, as I've been saying last time. This whole story for the euro and for the dollar, that for the year they're fairly compressed ranges, and the potential to expand those ranges is there, which means that the euro to the downside could be potentially back below 105 at some point.
I got to take a trip to Europe. Call me when that happens. I came to London a couple of weeks ago, and I was like, man, a couple months earlier, this would have been a 30% cheaper trip.
Yeah. The pound's done quite well, but it's either that or at some point we're going to see the euro extend higher, and we'll see that dollar index break 100. But for the now and over the near term, it looks that way. I know it's on the back of a short-term decline in euro dollar here, and the dollar strengthened over this last week and a half, 2 weeks. But there just seems to be a building story going on here that the US is in a better position currently than the Eurozone and the UK. We're probably about to put interest rates up this week, but we're struggling with stagflation. So the pound looks potentially vulnerable by the end of the week.
Yeah, totally agree. Any last thoughts before I let you go?
Only thoughts I'd say from a trading perspective, we're just coming into August. I think one piece of advice I'd always offer is lower your expectations. We are going into the big summer month for the Northern Hemisphere countries. And so lots of people are taking vacations. If you lower your expectations on what you're going to achieve and what the markets may be doing through the month of August, if it outperforms, then it's a bonus. But at least then, if it doesn't, if the markets go choppy and don't do too much, and volatility just dampens right down, then you're not going to be crying into your handkerchief, wondering what's going on.
Absolutely, man. Thank you, Charlie. Always appreciate your perspective. Have you back soon. Everybody,
thank you very much, as always.
All right, man. Thank you. All right, guys, that's it. Now I have to go talk about all this nonsense again, probably on Twitter Spaces. Kill me. But it's what the market giveth, you got to discuss it. I think that was in the Bible, actually. Scott, verse 2:17, 69, 420. Anyways, guys, I will be back tomorrow. Of course, we got Christopher Inks always on Wednesdays. And that's about it. See you guys tomorrow. Peace.
That's dope.